Hello, and welcome to the Moss Adams presentation of Foreign Corrupt Practices Act, Assess Fraud Controls Now. Before we begin, we have just a few housekeeping items to improve your participation.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Presenting today is Colin Wallace. Colin has provided management consulting and internal audit services to public, private, government, and not-for-profit organizations since 2002. He has organized and performed financial, operational, and compliance audits throughout the United States and abroad, and has worked on all aspects of the internal audit process, including planning, analysis, reporting, and project management. Colin has led numerous fraud investigations involving misappropriation and misuse of company assets, the Foreign Corrupt Practices Act, and management override of internal controls. In addition, he has managed significant SOX 404 assessment projects from their initial implementation to final reporting. Joining Colin today is Erin Krivanek. Erin has practiced public and private accounting since 2007. She currently specializes in internal audit, Sarbanes-Oxley, and control-based consulting. Erin performs all phases of internal audit consulting services and brings a risk-based internal audit approach to helping her clients identify risks, documenting and testing their processes and controls, performing gap analysis, and developing remediation plans. Erin specializes in providing internal audit and controls consulting services that focus on business processes. Prior to joining Moss Adams, Erin worked with the Assurance Group at a Big Four firm. Welcome, Colin and Erin.
Good morning. So today's objectives are to discuss the details of some high-profile cases involving FCPA penalties, to understand how news headlines and current trends correlate with the need to assess the anti-bribery risks and controls within your organization, to identify internal processes and controls that may be avenues for FCPA violations, and then also to understand how to implement action items to help avoid FCPA violations. So we're planning to cover a lot on today's call, which this will include what is the Foreign Corrupt Practices Act, evaluating the 5 elements of the Foreign Corrupt Practices Act, understanding the UK Anti-Bribery Act, looking at some FCPA enforcement in the news, looking at the Corruption Perceptions Index, which is an organization that tracks corruption statistics and ranks countries based on those statistics, looking at FCPA best practices, and some FCPA compliance assessment guidelines. So what is the Foreign Corrupt Practices Act? This is a U.S. law that prohibits U.S. companies and their officers, directors, employees, and agents from offering anything of value to a foreign government official, political party, or candidate for foreign office in order to influence an official act or secure an improper advantage in assisting, obtaining, or retaining business. It also requires that you're recording all of your accounting transactions accurately and that you have proper internal controls in place. One thing that's really important to be aware of is that the FCPA violations are accompanied by significant fines, penalties, and sanctions, both criminally and civilly, including significant fees as well as prison time.
So let's take a look at our first polling question. Which of the following is not a penalty for an FCPA violation? Would that be individual fines of up to $100,000 per violation, up to 5 years in prison, up to 10 years in prison, up to $2 million in fines per violation for the corporation? I've had a peek at the polling questions. We're going to make them a little tougher today. So we'll give the audience maybe another 20 seconds. We'll count this down, make sure everybody has the opportunity that wishes to answer the poll to be able to receive CPE today. And we'll close the polls in 5, 4, 3, 2, 1. And we'll take a look at our results. Back to you, Erin.
Great. So it looks like most of you got the answer correct. It is up to 10 years in prison. There would normally only be up to 5 years in prison. So now that we
and one
we all know
point that we want to make there is that you probably have seen in the news that FCPA violations have been in the hundreds of millions of dollars. The point about it being $2 million per violation is pretty important. So when it gets that high, it's normally because there were multiple violations. This could be paying the same individual 50, 100 times for smaller dollar amounts, but each one of those can be considered their own standalone violation of the FCPA. So the penalties can get quite high, even though they don't look very big on paper on the prior slide.
Thanks, Colin. So now that we all know we could spend up to 5 years in prison, we should probably understand what the elements of the FCPA really are. So the first one here is just understanding the what. So what is meant by anything of value? This is anything that could include payment, an offer of payment, or items that may hold more personal value, including goods, information, travel, college scholarships, etc. And then who is a restricted recipient under this act? So this is mainly foreign officials. However, other related parties could also include political parties, candidates for office, and officials in public organizations. Another major thing to note is that in a lot of countries, education and healthcare are run by the government, which would bring in doctors and professors into the scope of those recipients that could be included under the FCPA Act. And one specific example that I thought I would share here is that there was a Chinese subsidiary for an infant formula manufacturer, Mead Johnson, who was recently, I think in the last couple of years, charged with making improper payments to healthcare professionals just to recommend the company's products. So knowing that even though they were healthcare professionals and all they were doing was making a recommendation that may provide an improper advantage to the organization, that would fall under the FCPA Act. And then the last three elements would be, by whom, any promise of payment or payment made to an employee or agent acting on behalf of the organization. So it doesn't actually have to be an employee of your organization that makes this, performs the act or makes the bribe. It could be a consultant, a contractor, an agent. To do what, and then basically this means that the payment would be made with the intent to influence the recipient for any purpose that gives the organization an improper advantage over other businesses. And so that kind of the to do what is to influence, and then for what purpose is to create that improper advantage. So that's a little background on FCPA. I also wanted to cover the UK Anti-Bribery Act. And this is mostly because the terms of the UK Anti-Bribery Act cast an even wider net over what would constitute a violation. So what we just learned with the FCPA Act is that it really only applies to US-based companies, but the UK Anti-Bribery Act would apply to any company that has operations in the UK, but they don't actually have to be headquartered in the UK. Another key thing here to know is that with the UK Anti-Bribery Act, it doesn't have to be a foreign official. It could be two individuals from two different companies. It could be just any normal individual that is bribed that would cause a violation. So just diving a little bit deeper, basically the bribery can be two private individuals, not just a government official or a government-related party. It doesn't have to occur in the UK in order to be a violation. And the person that's providing the bribe may not even realize that it's a bribe. However, it would still be considered a violation. And then the sanctions related to the UK Anti-Bribery Act, these are not only brought upon the company that performs the act, they would also be brought upon the recipient of the bribe. And the fines and prison time related to the UK Anti-Bribery Act are also a lot higher than those that you would see with the FCPA penalties.
So as a quick recap on the UK Bribery Act, and something that we just want to emphasize is that while the FCPA is primarily for U.S.-based companies that do business outside of the U.S. and with respect to foreign officials, the UK Bribery Act opens it up to really any type of bribes and corruption, in that it doesn't require the recipient of whatever the payment is to be a foreign government official. So some people will say it's kind of like the FCPA on steroids, which is probably not too far from the truth. So if you do business in the UK or have sales agents in the UK, etc., you really need to be concerned about the UK Bribery Act in addition to the FCPA if you're not already looking at that area, even if you don't think that the UK is necessarily a very high-risk area from a corruption and fraud standpoint.
Great. Thank you for that clarification, Colin. So let's move to our second polling question. Payments to which type of people are prohibited under the FCPA? Is it a foreign official, a foreign political party, a candidate for foreign office, or all of the above? We just want to be sure and capture give everyone an opportunity to record their answer. If you're watching this on demand, as a reminder, there is no CPE available. We'll give our live audience just another few seconds and we'll close the polls in 2, 1, and let's take a look at our results.
All right, so I think we did pretty good there, and only a couple of respondents were a little bit off. So it is going to be any foreign political party, foreign official, or candidate for foreign office. And as Erin mentioned earlier, sometimes it's hard to tell in some countries who is and who is not a foreign official or affiliated with a political party or a candidate. So you really need to have controls with respect to FCPA, just as a fail-safe to find out if you are working with one of these. And certainly you don't want to bribe people, even if they're not a government official, but it's good to know who you're working with as well. So at this point, we want to potentially cover some examples of FCPA violations that you may have seen, that you may have heard about, and talk about what it is that caused them to get tripped up and what some of the penalties for these companies were. And starting with Teva Pharmaceutical Industries, there were a number of different ways in which they got tagged with the FCPA. Most notably is that their dealings with the Ministry of Health and the fact that the Ministry of Health ended up with about $65 million in compensation, personal compensation, as a result of some of their business dealings. And certainly if that person had not been a government official, it may not have been technically a violation of the FCPA, but to the extent that the company is still allowing that to happen, would still be something you'd want to look into. $65 million to most companies is quite a bit of money. Alternatively, in the Ukraine, they ended up hiring a government official and calling them a consultant, and then paying them a couple $100,000 related to fees and travel. So I know that we covered it earlier, but the different provisions of the FCPA provide not only for the actual bribing of government officials, but also for the books and records, and also the company's internal control processes that they have in place. So certainly those were both relevant in this situation as well. And in Mexico, certainly they bribed some government doctors. So as you can see, you can pass funds along through contracts. You might pay them as a consultant. You might actually just bribe individuals. This organization was kind of doing all of the above.
Another thing I would add to this that I think is kind of interesting is that the company said that after the charges had come down, that the company had basically reorganized their chain of command to reduce risks and started giving employees compliance training. And the Department of Justice said that it had reduced their penalties by up to 20%, given that they paid out $283 million in fines. That seems like a pretty significant reduction in their fines just based on some of the things that they put in place after they were charged. So,
which, if you look at the company before and after the FCPA violation, certainly you can kind of see a night and day difference. The DOJ did make a statement to the effect that the company hadn't put in place the internal controls, hadn't put in place the policies to detect, prevent. Basically, from their perspective, the company was just turning a blind eye and was not too concerned about it. And then, as Erin mentioned, the entire mind shift of the company turned around. they ended up with a new organizational structure and chain of command to help reduce the risk related to that. All right, another pretty well-publicized one is Och-Ziff, and this was the first time a hedge fund had been hit, but unfortunately probably not the last time. And as you can see through the dollar amount of the penalties that they were having to pay in the multiple hundreds of millions of dollar ranges, they had a number of individual offenses that had occurred. And the gist of it is the hedge funds were using intermediaries, agents, other business partners to pay bribes to high-level government officials in Africa. And the bribes were used basically to induce the Libyan investment authorities' wealth funds to invest hundreds of millions of dollars into Och-Ziff managed funds. So they were getting money back in. And what they were doing was recording the money paid to the Libyan agents as professional services other. And as I mentioned before, one of the provisions being the books and records, the SEC basically came back and said that the designation of professional services other is not accurate, and thus the payment was for an introduction and to pay bribes to certain government officials, and it was not for professional services performed. So while they might have thought that they were pretty clever by coding something to something that seemingly to the accounting world is kind of a general bucket, the SEC didn't think so when they actually looked at the case. So I think that that is a good segue into the next example that we have that most people are aware of, but I want to cover a few things specific to Siemens. And that is that they were the first time that criminal charges were ever brought up for the internal controls violations of a company. So a lot of the other violations were with respect to the books and records, similar to how you might think of when the government goes after somebody for racketeering. It's usually because or tax evasion. It's usually because you're falsifying records and not the actual act itself. But this was the first time ever that criminal charges for an internal controls violation occurred. And basically what the DOJ came back with was a whole list of internal control deficiencies that they believed that Siemens had that led to the overall violation. And I'm going to list off a few of these that might look a little bit familiar to you, or you might stop and think about, if we ever had a violation, would the DOJ come back and say that we had these deficiencies as well. And the first being to have a sufficiently empowered and competent compliance department. So a lot of companies, they may have an internal audit department, they may have a legal department, but might not have a department that is just focused on various compliance areas. So that would be something to look into. They had also a lack of sufficient anti-bribery compliance policies and procedures, which, going back to the prior one that I mentioned, kind of goes hands in hand. So if you don't have a compliance function, you might not have sufficient anti-bribery controls policies in place. When things did come up, or when whistleblowers or people were alerting management that wrongdoing was occurring, they also failed to appropriately investigate and respond to certain corruption issues. And again, this is all according to the DOJ. This isn't me. They also failed to discipline the employees that were involved in the different violations. And one thing you hear of a lot when people are trying to set up a FCPA compliance program is that you should have training. They also cited Siemens for having a lack of a mandatory FCPA training program. And finally, they also called out the fact that they failed to implement sufficient accounting and finance controls, which they specifically called out a number of those, including a lack of control over the number of banks that they had internationally. They had a widespread access to use of cash and off-the-book accounts, so what we would call in the accounting world segregation of duties issues. They cited inadequate reviews that were performed by employees that were responsible for authorizing payments. So in your accounts payable areas, if you have somebody that approves payments, they're saying that those reviews were not sufficient. In one example that they had given, the person that was approving payments in Russia was not even able to read the supporting documentation because it was in another language. So they were basically approving something without any support, is what the DOJ concluded. And I could very much agree with that. If you're trying to tie something out or understanding what the payment is for and you don't understand the language and can't read it, it's likely that you're not doing a good job of reviewing. And then as a final bullet, they had also called them out for having extremely limited internal audit resources that were supporting compliance efforts. And as I mentioned before, the compliance function wasn't in place either. So a number of things with Siemens that were called out. And again, I think that it is an important FCPA case in that it was directed at largely at the internal controls that the organization had. And as Erin mentioned about the UK Bribery Act, one of the only defenses that you have in one of those prosecutions is that you have basically a compliance program in place to help prevent and detect instances of FCPA, or in that case, UK Bribery Act violations. So, key point, obviously, that I'm trying to make is internal controls are important. If you do happen to have a violation, they can help you. They certainly won't help you if you don't have them in place. And again, in this case, the dollar amount for the penalties, et cetera, was pretty high because they had over 4,000 alleged corrupt payments that totaled over $1 billion that they had made. So for each one of those, they could be charged with a separate instance of an FCPA violation. All right, moving along. Some other enforcement actions you may have heard about. Halliburton was certainly one that was pretty front and center. Some of these companies you may not have heard of because they are foreign companies. However, if you look them up, the reason we're talking about them, just so as not to have any confusion, is that a lot of them, or all of them, are listed on the U.S. stock exchanges, so even if they're a foreign company. Odebrecht was an especially large payment that ended up happening as a result, over $2 billion. So that one was relatively recent as well. And one thing that, again, I'd like to stress on all of these examples is that we're really talking about the fines and penalties that are assessed up front on these. If you look into the details on the settlement on any one of these, you will see that in addition to the fines and penalties, the companies also have to agree to have external monitor come in for sometimes it's 3, 4, 5 years that basically watches over them to make sure that they don't fall into any of these practices that they were having before, that they're executing on all of the remediation that they had agreed to, and that any controls that are put in place are actually operating effectively. So think of that as a blank check that companies have to write to attorneys or CPAs or other compliance professionals to help them monitor their FCPA program. All right, a fun little chart just showing you the extent and, over time, the increase in the monetary results of some of these FCPA violations. It seems like every few years it spikes up. Maybe the SEC and DOJ go after it a little bit more those years, not sure. But 2016 was certainly the highest year that had been recorded, with some of the highest penalties paid out for violations. And this is kind of a breakdown of some of the larger ones. Again, this does not include some of the other penalties that they may have to pay in restitution or to other countries, or as part of monitoring programs that they have to put in place, or like I said, the external monitor that would have to look over operations and the company would have to fund. So I think it's important to also stress that your subsidiaries, albeit sometimes off on their own, are ones that you really have to look at closely and determine whether or not you have specific risks that might touch on FCPA or the UK Bribery Act. So specific fines that are levied for the subsidiaries are listed in this table here. Again, a lot of them, if not all of them, have to do with FCPA in this table, but certainly they could be for payments made to others that aren't government officials with respect to the UK Bribery Act as well. So what does this mean? What are some of the avenues for FCPA violations that you might want to be aware of? You want to look at and basically assess your operating environment. What kind of businesses does your company do outside of the U.S.? Do you conduct foreign business through your own employees? Do you use agents, distributors, contractors, etc.? And that's one of the big eye-openers that I've run into when I've worked with companies, is that a lot of times they provide training and all of this compliance resources, etc., to their own employees, but then they use a bunch of contractors, distributors, agents, etc., and they don't apply the same rules to them, and they might not provide the same monitoring and oversight. So definitely take note of what your structure looks like overseas. Same thing with whether you're shipping through freight forwarders, etc. How do you get your goods from one place to another? What different government entities, whether it be customs, the loading docks, etc., that you have to get through that might elevate risks. And one that people don't think about a lot is, do you sell your products into universities and things like that? If you're selling tech products into hospitals or universities in foreign countries, most likely that they're government entities that if you were doing anything outside of the norm to win that business or to sell your product, you could be in violation. All right, if you haven't already, I would suggest going to Transparency International's website. It is an organization that basically collects corruption data around the world. And generally speaking, as a first step in any sort of FCPA risk assessment or otherwise, we would, advise our clients to include this as part of their risk assessment process, to identify which countries they do business in, to identify which of those countries might be higher risk for corruption, violations, etc. And these change year to year. So in addition to doing it, for an initial kickoff time, you should also check in and probably update it regularly to make sure that things haven't changed. And just between 2012 and 2016 on this chart, you can see some of the movement that some of these companies have made or not made. So in this case, the United States was number 19. It's good to have a high, not a high number, but a 1 through 10 number versus a 100 through 200 number on this index. So at number 19, the U.S. was doing pretty good. If you look at them in 2016, dropped down to 9, but there was some shifting with some of the other countries on here. So certainly you want to take a look at that. And at this point, we want to kick it over for another one of our required mandatory polling questions, and that is you.
Thanks so much, Colin. So how can you prevent a subsidiary from secretly setting aside money to make unauthorized payments to phony vendors? Would that be by limiting access to funds through a system of checks and balances? By implementing a well-documented policy on whistleblowing that rewards anti-corruption efforts? By conducting regular fraud assessments, especially if your environment puts your organization at risk for FCPA violations? Is it all of the above or none of the above? Go ahead and leave this open. We have had some great questions come in to our Q&A, and we'll be sure and cover those today. So if you've asked a question and we haven't answered it yet, please just sit tight. So we'll go ahead and we'll close our polls and then give them another 5, 4, 3, 2, 1. Let's take a look at our results. And Erin, I'll turn this over to you.
Looks like everybody's paying attention. Almost everyone got the answer correct to all of the above. And, Colin's walked through a lot of different things that you can do, and these are obviously just a few of them. So with that, I'd like to jump into some of the best practices and things that we can do within our organizations to just make sure that we're setting the right tone and setting an example for the rest of the organization to make sure that these violations don't happen. So the first one here is just to have a strong tone at the top, including a very transparent commitment to honesty, integrity, and ethical behavior. This is something that really should be emulated by all levels of management, and it helps to ensure that those same values are observed and exhibited by all of your other employees. And the next one is very similar, but a key element of setting tone at the top is really management's commitment to lead by example. So if you talk the talk, then you must walk the walk in order to make sure that others take you seriously and emulate that same behavior. And then just making sure to, memorialize the company's values and commitment to ethics through whether it's a code of conduct, communication throughout just daily interactions with employees, making sure that people really understand the importance of the ethical behavior and commitment to ethical behavior within the organization. So I think that having, a code of conduct and having a policy and maybe having people sign that code of conduct are things that are really easy to make sure that the expectations are communicated, people read them, people understand them, and it also kind of just brings a sense of belonging to being all part of one effort. So then making sure that we have an ability for employees to report on violations or potential violations is something that's really key, because most of the time these things aren't going to be identified by, you know, management and leaders at the top of the organization. It's going to be employees within the organization doing the day-to-day transactions and activities, whether it's in accounting or if it's in the sales field or wherever it may be. Having some sort of an avenue for people to report out, whether it might be a whistleblower, whether it be a contact in legal, things like that, just making sure that people have the ability to report potential findings or potential violations without the fear of repercussion as well. And then additionally, we should always recognize and reward integrity in the workplace. So I think, you know, doing this, management will continue to promote and encourage this behavior and positively influence others that might also observe the recognition. And then lastly, and probably the most time-intensive and proactive best practice here is just to perform an FCPA assessment with the intent of identifying risk areas and being able to identify those things that may expose the organization to an FCPA violation. The FCPA assessment will help to also bring awareness to critical gaps within the organization, and they'll help you to be able to focus on how to avert a crisis completely. So the controls that can be implemented to reduce the identified risk areas are really the key to making sure that you have assurance in this area. And a lot of times we'll do a whole lot more than just sending out a certification to people and having them sign it to say, okay, I understand.
So time for our fourth and final polling question. When thinking about FCPA and possible violations, when is the last time your organization assessed their fraud controls? Is it within the past 12 months, within 1 to 2 years, within 3 to 5 years ago, longer than 5 years, or perhaps never, or you're not sure, you don't know? And we'll provide everyone the opportunity to answer. And I'll count it down. So 4, 3, 2, 1, and let's take a look at our results.
All right, so it looks like most of you have done this within the last 12 months, and if some of you have done this maybe not at all, or maybe it's older than a year or two. But really what I'd like to do in the last 10 minutes or so of the presentation is give you guys some guidelines and some tools so that you can do this, so that you know what kind of things might be helpful to focus on when doing an assessment. So obviously just determine what your FCPA risk is by performing that formalized risk assessment. And when you do the formal risk assessment, you know, a lot of the things that Colin actually talked about are things that you'll want to focus on. Certain factors might include what type of business are you doing, what type of transactions are normal transactions within the organization, where are you performing business, where are you conducting business, in what countries, the degree of interaction that you may have with foreign officials or government agencies. All of those things might increase your risk. What does the organization's regulatory environment look like? And also how much are you using agents, consultants, brokers, etc. So all of those things may increase your exposure. Also, try to identify specifically high-risk locations, subsidiaries, affiliates, and personnel, and maybe consider creating and maintaining a list of some of those specific personnel or specific agents, and making a list of those countries that you may have business in where this could be a higher risk because of the country, but then also making sure that you're identifying if those countries also have their own anti-bribery laws, specifically like the UK Anti-Bribery Act. So just making sure that you're aware that your interactions may not just be enforced by the U.S. They may have other enforcement actions within those locations. So you also want to consider if you have standard contracts and agreements with third parties that include FCPA language or requirements. So just making sure that people you're doing business with understand that you have a commitment to integrity and to be compliant with the FCPA Act. And then also just consider, if onboarding your new vendors or third parties includes an evaluation of that organization. Have they had any violations? Are they a good company to do business with? So things like that. And then lastly, just making sure that you have a formal policy and if it's available to employees. And so then diving into, making sure that you do have a policy. So I think that's probably a really easy one, is just say, if you don't have a policy, let's put one together. Let's make sure that we have an objective, that our employees understand that the policy is really to make sure that people are aware of FCPA and that they're engaging in ethical and legal practices. You would also want to include in that policy things like a definition of the FCPA Act and anti-bribery. You might also include what are the penalties against the corporation, but then also against the individual, because I think maybe a lot of people don't really understand that as an individual, they can also be held to the same standard. So they could be charged with those violations individually. Within that policy, you should also just document the company's record-keeping requirements related to this. You should define roles and responsibilities of individuals within the organization. So that might include, a responsibility to train your individuals. It might include a responsibility to just comply with the policy. So also include specific guidance regarding what activities might be prohibited. Going back to some of the examples we provided earlier about how government officials could include educators or healthcare individuals, just making sure that people within your organization also understand that. And then also just having the ability for people to ask questions, having an avenue for them to go to ask questions, whether it's legal, whether it's internal audit, accounting, whoever it might be, that could answer questions if people aren't sure. And then also just making sure that people understand where they can report potential violations. So like we talked about, having a whistleblower or things like that. And then lastly, you might also just include like what might some red flags be. So, if you go into a new country, should we maybe reconsider doing business there, or looking for unusual payment patterns? So maybe telling the accounting department, hey, look for, unusual cash payments from this part of the world, or whatever it might be, just things that could be red flags that you could give your employees a little bit of something to think about.
Right, and before we go to the last few bullets that you have here, in addition to a policy, and I think somewhere that a lot of companies drop the ball, is that they don't have well-defined internal controls for the various areas that are highest risk for, I don't know if it would be promoting, but it would certainly be for allowing violations to occur. They may just rely on the policy not to do something versus having the actual controls in place. And as I discussed earlier with the Siemens example, they can prosecute you for not having the appropriate internal controls. I'm just trying to make the differentiation between policy and controls here. So once you perform your FCPA risk assessment, once you develop your policies and procedure documents, what are the controls to make sure that those high-risk processes in the high-risk countries are being covered. And that would be your internal controls over treasury, your accounts payable, your expense reporting, even payroll. Anywhere where money can be transferred or otherwise leave the company should have a defined set of internal controls around it. And even so much as your vendor management process, who can create new vendors in the system, things of that nature should be plugged into your overall compliance assessment, and something that you shouldn't, as if you're the one tasked with FCPA, just assume that accounting is doing or assume that finance is doing. It is an integrated piece of the overall compliance and one that is very important to make sure you don't have violations. So it's one thing to have a policy, I guess is my point. It's another thing to have and enforce and test the operating effectiveness of your controls. So I'll pass it back over to you, Erin.
Sure. No, you're exactly right. And I can jump ahead actually to cover that bullet. You know, making sure you have a proper process in place for accurate recording of transactions, and that you do have internal controls around the AP, the expense reporting, the payroll, the cash, all of that stuff. It is very important, and it is probably the number one thing that would prevent a violation from actually occurring. Making sure that you're doing an assessment and a risk assessment and have a policy are all things that you can do to evaluate what your risk might be. But if you don't have those controls in place, there's not much you can do to say we're covered. So I was going to add that, you know, when you have that policy, you really should be training all of your employees on it, making sure that people read and sign that policy. And we had talked about having potentially creating a list of employees that might be at high risk or that might work in areas that could be high risk, maybe making them have a deeper level of training on the FCPA policy to make sure that they really understand that they're the ones on the front lines that could be in a position to have a violation. And then also, you know, performing a periodic compliance audit. So this would really just be saying, okay, you know, we've got some controls in place. Let's make sure that they are actually doing what we expect them to be doing. Are they mitigating those risks that we have identified? Those areas where we have red flags, are we covered by the controls that we have in place? And then also making sure that you have a compliance team that can investigate some of those red flag items. So if something happens or you get a whistleblower report, is there a team that can jump on that quickly and make sure that one, if there really is a gap, that you can come up with a new process or put a control in place to make sure that it stops quickly, but then also do the investigation to make sure that it really isn't a violation. So we'll wrap up with some key takeaways, and I hope that you got a lot of good information out of this. I think we spent a lot of time talking about the enforcement and the penalties related to FCPA, that they continue to rise and they continue to increase in significance. But not only that, I hope that you have a better understanding of some of the things that you can do to implement within your organization to reduce the risk of a violation, including performing an FCPA assessment and being able to measure your compliance. So it's been our pleasure to present for you guys today. And you know, if we have questions, I think we're going to open up for questions for the next 5 minutes. Thank you very much.
Thank you so much, Colin. Thank you, Erin. So we made a point of going through and addressing most of the questions during our presentation, but I do have one left outstanding that I'd like to cover today, and I'll take us back to the slide that's in question. But the question that came in is, in the previous slide, what do you attribute the huge increase in violations assessed from 2015 to 2016? So let's go back and we'll
Well,
so they're looking at this.
An interesting one, but I don't know that there's anything that I could attribute that to aside from the timing of when some of these cases came in. And this isn't necessarily a representation of the number of cases that have come through the SEC and DOJ. It's of the actual penalties. So there were a couple of big penalties that hit into 2016. That doesn't mean that companies were necessarily more corrupt in 2013, 14, 15 leading to that. It's when they were identified and when they ultimately were penalized. So I don't have an answer for that. It does seem like a pretty low number for 2015, but that could just have been the SEC and DOJ being focused on other items at the time.
Great. Thank you so much, Colin. And thank you, everyone, for joining us. If you find that you have questions and maybe they're specific to your company or specific to your needs, please don't hesitate to reach out to either one of our presenters today. They're always happy to take your questions. And one last thing we'd ask you to do is please take a moment and complete a brief survey. This helps us decide what to provide for you in the future in our ongoing series of webinars, and it helps our presenters improve the way that they deliver the message to you. So thank you again for joining us. We hope you have a good day.